Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines: the Philippines posts its biggest dollar surplus in nearly 4 years. The Energy Department is set to cancel more than 100 renewable energy contracts for failing to meet deadlines. Indonesia's new president, Prabowo Subianto, who pledges to fight corruption, aims for an 8% economic growth rate within the next 2 to 3 years. And Chinese drone maker G files a lawsuit against the Pentagon after being added to a blacklist of alleged military-linked companies. First, let's take a look at how Asian markets are performing as we kick off the new trading week. Markets are mixed, with investors keeping a close eye on China ahead of a key central bank announcement. Japan's Nikkei 225 is trading sideways with a slight downward bias ahead of its general election this weekend. Now, South Korea's Kospi is up by 0.3%. Elsewhere in the world, Australia's ASX 200 is up by 0.6%. Now, back in Asia, over in China, investors expect the People's Bank to cut the 1-year and 5-year loan prime rates by 20 basis points, with concerns lingering over the country's economic recovery. On Wall Street, U.S. stocks hit new highs last week as tech stocks rallied. The Dow Jones gained 0.1%, the S&P 500 gained 0.4%, and the Nasdaq climbed 0.6%. Sentiment was boosted after Netflix reported strong subscriber growth, jumping 11% to a new record high.
I think inflation's going to go higher here. I think we made the cycle lows last month at 2.4. I think you're going to start to see 2.6s, 2.7s, and heading back towards 3. I don't think you're going to see 9 again, but globally inflation seems to be picking up a little bit. I look at commodity prices have rallied here, and that's obviously going to put a strain on consumers' pocketbooks. And also the price of shipping costs from China, which we get a lot of things from China. They're up over triple digits in the last 12 months. I think you're going to see a little bit of pressure on inflation going up, which I think is going to stop the Fed from doing a whole lot of cutting in the first half of 25.
In Europe, markets were mixed last Friday. The FTSE 100 dropped 0.3%, dragged down by British American Tobacco following a costly settlement in Canada. Germany's DAX and France's CAC 40 added 0.4%, benefiting from a resurgence in tech stocks. Meanwhile, over in the commodities market, oil prices remain steady as Israel vowed retaliation against Iran following an attack targeting Prime Minister Benjamin Netanyahu's residence. Brent crude is up by 0.2%, trading above $73 a barrel. Gold is also surging, reaching new highs on strong demand as a safe haven amid growing Middle East tensions and uncertainty over the U.S. election. Exciting news from the region's markets. Asian IPOs are expected to have a blockbuster week ahead. Data from Bloomberg shows that around 20 companies from across the Asia-Pacific region are scheduled to list shares next week, potentially raising up to $8.3 billion, the highest weekly volume since April 2022. These IPOs come from markets including China, India, and Japan, reflecting a broad uptick in share sales. The performance of these newly listed companies will be closely watched by bankers as more equity offerings are planned over the next few weeks, with a focus on completing deals before the U.S. elections on November 5th. Here's some important events and data that financial markets are watching this week. First, the International Monetary Fund and World Bank Group. They're having their annual meeting from October 21st to the 27th in Washington, D.C. Financial leaders will talk about how countries can handle slower economic growth and rising global debt. Next, Tesla is set to release its earnings report on the 23rd, with investors watching closely. Weaker than expected results could spark fresh concerns about the valuation of tech stocks. Tesla's shares have already taken a hit following a robo-taxi announcement that left many details unclear. Here at home on Thursday, the Philippines will announce its September budget balance. In August, the budget deficit fell to over 50 billion pesos, down from 133 billion pesos last year. Also on the 24th, the Eurozone will release its October Purchasing Managers Index, or PMI. Last month, business activity fell in the Eurozone, but not as much as expected. The Philippines posts its biggest dollar surplus in nearly 4 years, a positive sign for the country's financial stability. Data from the Bangko Sentral ng Pilipinas shows a $3.5 billion balance of payments surplus in September, a major turnaround from last year's $414 million deficit. This surplus was largely driven by foreign borrowings by the government and by earnings from the central bank's investments abroad. This is the biggest surplus since December of 2020, when the country posted a record BOP surplus of $16 billion. As of September, the total BOP surplus stands at $5.1 billion, already exceeding the BSP's full-year forecast of $2.3 billion. A larger dollar surplus helps strengthen the Philippines' reserves, providing a buffer against external shocks and improving investor confidence in the economy. Now let's take a look at the country's external debt payments, which have gone down as of July. The Philippines paid $7.7 billion on its external debt, nearly 8% less than the $8.3 billion paid last year. Principal payments dropped by 28% to $3.1 billion, while interest payments rose by 15% to $4.6 billion. As of the second quarter, the debt payments were 3.1% of the country's GDP, down from 3.6% last year. This reduction lightens the government's financial load, allowing for more flexibility for other spending needs. The Department of Energy is set to cancel at least 105 renewable energy contracts for failing to meet deadlines. Energy Undersecretary Rowena Cristina Guevara explains that these contracts will be reassigned to new developers who can complete the projects. Many of these contracts, awarded between 2017 and 2019, faced delays due to issues over securing permits and grid connections. These projects cover a range of renewable sources, including solar, hydropower, wind, geothermal, and biomass energy. In June, the department updated its guidelines to remove developers who failed to make progress, allowing more serious and committed developers to take over the projects. A leading economist suggests that countries should consider imposing a wealth tax on the super rich to help fund efforts against poverty and climate change. This idea comes from Jeffrey Sachs, a world-renowned expert on global development and sustainability, who has advised the United Nations and governments across the globe. Speaking to Business World, Sachs said that taxing the wealthy is both fair and practical, as the super rich have more money than they can ever spend. However, he also points out that such taxes could be challenging to implement given the strong political influence of billionaires. On the other hand, Bureau of Internal Revenue Commissioner Romeo Lamagi Jr. cautions that a wealth tax could discourage foreign investments and lead to capital flight.
A major point to consider here is how would that affect the foreign investors here and the wealth that is in the Philippines? Would that have an effect of just the wealth actually, or the money or the assets just leaving here in the Philippines because of this wealth tax? So it's really it's not. There's a really good argument against it. It's a very important and very critical decision point because of the effect of the wealth here in the Philippines.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened a few minutes ago. Let's take a look at the initial figures. After gaining 1.44% week on week last Friday, the PSE index is succumbing to selling pressure just a bit. We're at 74.08, down by just 0.1%. The broader all shares index is flat right now at 40.81. Now, despite the BSP's dovish stance on monetary policy, the index has been having a hard time breaking past the 7,500 resistance level. Analysts say offshore uncertainties or geopolitical risks are keeping investors at bay, but maybe third quarter earnings results, upbeat third quarter earnings results, more of that might inspire investors to come back into the market. In the meantime, we are seeing buying in the industrial, holding firms, and in the mining and oil counter. That's up sharply, up by 1.6% in early trade, while the financials and the property counters in interest rate sensitive sectors are down marginally. Now, at the foreign exchange market, the peso opened stronger from its previous close. It opened at 57.45 against the greenback from a previous close of 57.51. Now, in other news, BPI Wealth, the asset management arm of Bank of the Philippine Islands, expects investors to shift towards riskier assets as interest rates continue to fall, signaling a major change in investment strategies. BPI Wealth President Tere Marshall explains that in a high interest rate environment, investors tend to park their money in short-term deposits, resulting in limited interest in riskier options like bonds and equity funds. However, with interest rates now on the decline, she sees this trend reversing, with investors likely to start seeking out higher returns from riskier assets. The Bangko Sentral ng Pilipinas has cut interest rates twice this year, and another 25 basis point reduction is on the table for December. Lower interest rates tend to push investors out of safe havens and into higher yielding assets, which can drive growth in markets like bonds and stocks. To take advantage of this shift, BPI Wealth is planning to launch a multi-asset fund targeted at millennials. They're looking to raise at least ₱1 billion in funds for management. Cignal Renewable Energy is partnering with Levanta Renewables, a Southeast Asia-focused renewable energy platform backed by Actis, to develop a major onshore wind portfolio in the Philippines. The partnership will form a joint venture to develop wind projects in Luzon and in the Visayas. This marks Levanta's first entry into the Philippine wind market, and it's also a key move toward reaching their goal of 1.5 gigawatts of operating capacity in Southeast Asia by 2028. This collaboration is expected to significantly advance the country's renewable energy ambitions, helping to meet the rising demand for power through clean and sustainable sources, aligning with the government's push for a greener energy future. Dito Telecommunity, led by Davao businessman Dennis Uy, is targeting 300,000 home broadband subscribers by next year. Dito's Chief Revenue Officer for Consumer Business, Evelyn Jimenez, shares that the company expects to reach 150,000 subscribers by the end of this year, and that they plan to double that figure by 2025. They hope to achieve this growth through their affordable and unlimited prepaid broadband powered by true 5G technology. The 5G RedCap technology operates on 5G standalone networks, offering higher capacity, better quality, and lower latency, giving users a more seamless experience. Megaworld, owned by billionaire Andrew Tan, expects to generate 3.5 billion pesos in sales from its upcoming residential condominium in San Fernando City, Pampanga. The project, St. Marces Residence, will be a 17-story building featuring 361 smart home units. This will be Megaworld's fourth residential development within its 35.6-hectare capital township, with turnover expected by 2030. This marks Megaworld's continued expansion into emerging growth centers outside of Metro Manila, contributing to Pampanga's rising property market. It also shows the increasing demand for smart home technologies and integrated lifestyle communities. In other news, low-cost carrier AirAsia, owned by Malaysian millionaire Tony Fernandez, cancels its planned Manila to Nagoya route just days before its maiden journey. The Manila to Nagoya route is one of 4 routes cut by AirAsia as part of a cost-saving strategy, which also affects routes from Cebu to Puerto Princesa, Caticlan, and Davao. This decision comes after AirAsia offered a promotional fare of 888 pesos for the Manila-Nagoya route, which was initially set for travel between October 29th this year and March 29 of 2025. The move could signal AirAsia's shift to focusing on more profitable routes amid rising operating costs. For travelers, this means fewer budget flight options to Japan and other domestic destinations, potentially impacting competition and airfare pricing. Now, Indonesia's newly elected president, Prabowo Subianto, vows to tackle corruption and make the country self-sufficient in food and energy within 5 years. Prabowo, who won nearly 60% of the vote in the February election, has ambitious goals, including achieving 8% economic growth in the next 2 to 3 years and attracting more investments. The former general inherits a $1 trillion economy that has grown at around 5% over the past decade, but has struggled to break through that rate. Prabowo also addressed foreign policy in his inaugural speech, expressing support for the Palestinian people and pledging to send more aid to Gaza. He aims to keep Indonesia's non-aligned stance in global affairs. We're taking a quick break. Basis Points will be right back. Welcome back to Basis Points. Chinese drone maker G is taking legal action against the Pentagon as it seeks to be removed from a blacklist of companies accused of having ties to the Chinese military. G claims that its inclusion on that list is unjust, arguing that it does not pose any threat to national security. The company claims it has attempted to engage with the Defense Department for over 16 months, but now sees no other option than to pursue relief through federal court. G was blacklisted in 2022, causing its U.S. sales to drop by over 20%. Being on the blacklist limits G's access to U.S. suppliers and investors, impacting its global operations. Additionally, G has faced scrutiny for its alleged involvement in surveillance of ethnic minorities in China and for its drones being used in the Russia-Ukraine conflict, making the outcome of this case crucial for its reputation and future market access. Embattled plane maker Boeing is selling a small defense subsidiary that produces surveillance equipment for the United States military. Boeing announced that digital receiver technology will be sold to Thales Defense and Security, a U.S. arm of European defense giant Thales. This sale comes as Boeing grapples with financial pressures and a worker strike, signaling the company's efforts to streamline operations and focus on its core business. On Wednesday, factory workers will vote on a new contract proposal that includes a 35% pay increase over 4 years, a $7,000 signing bonus, and a reinstated incentive plan and higher retirement contributions. This deal could bring an end to a costly 5-week strike that involves around 33,000 workers, mostly in Washington state. Boeing's decisions reflect a broader trend of companies restructuring to stay competitive amid financial and labor challenges. Now, in other news, Manila's rise as a global culinary hotspot is changing the local palate and driving the demand for wines in the Philippines. Premium Wine Exchange co-owner Jojo Madrid shares that local tastes are shifting away from bigger, bolder wines like California Cabernet Sauvignons to more refined styles of wine.
We're seeing a demand for our traditional Napa Valley wines sort of soften in favor of regions like Burgundy. And I think that trend is going to continue.
Madrid also notes that restaurants are now focusing not only on elevating their food, but on curating impressive wine selections to complement their dishes.
I think restaurants, thanks to restaurants like Toyo, Inato, Hapag and Aya, Balay Palma, thanks to these restaurants, and M Dining, of course, I have to mention that, they're a lot more interested in sort of developing excellent wine lists, whereas that was not really sort of the focus of these restaurants before. They would just focus on their food. But I think they've come to a realization that to elevate the entire experience, you need a good wine list. There's this eagerness to actually start introducing better quality wines, not necessarily the most expensive wines, but interesting wines to pair with their dishes. And that, I think that's very big. And you know, there's been a lot of talk about Michelin coming to the Philippines. So they're all like trying to say, okay, we need to take our wine list a bit more seriously. Jojo, can you help us? And things like that. And that's where we come. All right. Okay, so it's a very interesting time to be drinking wines in the Philippines, put it that way.
And that's it for Basis Points. I'm Maiki Oreta. We'll be back for more news on the financial markets and more tomorrow. Keep it here on BNC, the Billionaire News Channel, always on top.